In this episode, we're talking to Chris Myers, co-founder of BodeTree.com, and specifically how Chris raised about $5 million from angel investors and venture capitalists to build a platform to help small businesses track and manage their finances better. And Chris talks about how he used a dual monetization model where he's partnering with big institutional banks to help small businesses improve and make the loan getting process less painful. And if you've ever started a business or applied for a mortgage or even a credit card, you know how uncomfortable and cumbersome and painful getting a loan or raising debt can be. So without further ado, let's go ahead and jump right into it. Hey everybody, Chris Dunn back with you. And in this episode of Pathways to Wealth, I have Chris Myers from BodeTree. Chris, you ready to kick this off?
I am.
Awesome. Well, thanks for being here. Chris, I know you're the founder and CEO of BodeTree, right?
Yeah, co-founder, but yes.
Co-founder. Okay. So
Yeah.
do you have are you the technical guy or marketing guy? What kind of co-founders do you have?
So actually my co-founder and I are both kind of finance guys, with finance being the core of everything we do at BodeTree. So I'm more on the operational side. He's more on the board kind of oversight side. And then we've really recruited some top-notch talent on the technical groups and marketing and all those different things. So kind of a jack of all trades in that regard.
Okay, cool. So let's get like the 10 to 15 second pitch of what BodeTree is. And by the way, the way that I found this is my wife is actually, she's kind of the CFO for us, and she was looking for a solution like this. So why don't you explain to everybody exactly what you guys do?
Yeah, certainly. So BodeTree is a financial management platform for small businesses. There's about 30 million small businesses in the US, and well over 90% of those do not have organized, accurate, and up-to-date financials. Accounting's a pain, nobody wants to do it, and so most business owners, and particularly the ones that are in that sole proprietorship kind of space, simply do without. And so what BodeTree does is it connects automatically to your bank accounts, credit cards, any kind of financial account you have, draws all of that information in, automates the accounting, automates all of the analytics around your business, and then connects users with funding and other solution providers. So really, BodeTree is the platform that sits at the center of what the small business does and all of the partners they interact with across the board.
Okay, cool. And so I guess, would you compare it to like a Mint for business?
Think of it as a Mint.com for small business with a whole lot more added into it. But yes, it's a very good analogy.
Gotcha. And so one thing you said was also for funding sources. What did you mean by that?
Yeah, so we have a tremendous amount of data at our fingertips for any given business, right? We know every transaction. We have perfect insight for the business owners into their business. Part of acquiring all of that data and organizing all that data means that we have just about everything that any business owner needs to complete a loan application, connect with alternative lenders, to make a credit decision effectively. So what we do is we take all of the data that's available for the small business and we allow them to connect with partners, lenders on our platform to completely automate the lending process. So sometimes that's traditional banks, in which we can take the lending process down from 90 days to about a week. In other cases, it's alternative lenders, equity-based and debt-based alternative lenders that are able to make snap decisions for business owners and fund them within a very short period of time.
Okay, interesting. So do you guys also work with venture capitalists and angels on that side, or is it primarily like debt-based through banks and lenders?
Right now, we're primarily debt-based through banks and lenders, although there's nothing preventing an angel or other kind of private investor from utilizing it in that regard. It's just that for us, the majority of the small business kind of capital market is debt-focused right now. And so that's where we're able to really be very quick. And I don't think there's a single person that doesn't view lending as a pain point. I mean, there was a great stat I read not too long ago that said that 30% of people would rather have a root canal than deal with a bank. So we tap into that angst.
Yeah. My background before I got into finance and the stock market and investing was I was in the mortgage industry starting in high school and have been a part of over 1,500 or 1,600 transactions. And I can absolutely say that's correct. Most people would rather have their teeth ripped out than deal with that. So if you guys are automating that and solving that pain point, that's huge.
Yeah.
So when did you found the company?
Founded the company in late 2010 and completed the first version of the product in mid 2011. So we're going on 5 years now, and it seems like the shortest and longest 5 years of my life at the same time.
Nice. So did you guys go through venture capital or angel capital? Did you raise any money?
We raised just shy of $5 million today. We're actually in the middle of a round right now. And the majority of our investors are, in fact, angel investors. We do have one VC firm that's based here in Denver that has been our primary backer. But we go with a lot of angels and high net worth individuals. The reason for that is that, frankly, we think it's a much better route for companies at our stage. It's a better connection with not only the capital, but also the people that bring that capital to the table and their ability to engage and really support the business they're investing in. And frankly, we've just known a lot of them. My co-founder, Matt, was a portfolio manager for Janus for many years. And so we know the kind of professional investor space very well and have a lot of those folks in our network. So we've been very fortunate. We've been approached by, just about every major VC firm out there. And more often than not, we've been the ones who've kind of opted to pass on those opportunities because we really do like to keep it a little tighter, a little more focused with that angel group.
Nice. Yeah. So I'm plugged in an active angel group here in Austin, Texas. And yeah, I agree. I mean, it seems like companies in kind of that 1 to 10 million span, especially in kind of the SaaS service for finance, it's a great space to grow. How are you guys on traction right now? Or are you guys revenue, pre-revenue? How's it going?
So we're generating revenue. 2016 should be the year that things really take off for us. We have two channels in the business. We have a direct channel, which is what you'd see at BodeTree.com, which is a de minimis part of our business. But our institutional channel is the other one, and that's really where we focus. So we sell primarily through banks, insurance companies, credit unions, state associations, you name it. And that is a very powerful channel for us. It also is a very long channel for us, a long sales cycle. And so now we have a lot of those big contracts coming online. So we should be rolling out to about 1.5 million small businesses here in the first part of 2016. And as a result, that's when we're really going to hit significant revenue. So we're in high growth mode right now. It's exciting, growing the team. And, I think we look very much like a 5-year overnight success, which the way it generally is with a lot of these things. But yeah, we've definitely hit the right kind of product market fit, and we're growing rapidly.
Nice. So what's the biggest challenge you guys have faced so far?
I think it's really two, actually, that very much go hand in hand. The first is that small business is an epically difficult segment to go after. Small businesses are everywhere and they're nowhere. They have the best and worst traits of consumers and enterprise all at the same time. And connecting with them via the right channel is a difficult process. And when you go direct, your customer acquisition cost is just prohibitively high because you have to advertise, you have to get out in front, and particularly when you have a product that is a freemium product like ours, or one that is a platform where volume is more important than a payment stream from an individual. It becomes very expensive very quickly. So for us, we took a little bit of time to really find out the right mix of channel mix for us. We started out with Intuit as our primary partner. We found that Intuit, while they certainly have some strengths, are not as entrenched in the small business space as many would generally think that they are, right?
They're more enterprise, big time.
Yeah, and a lot of people that use things like QuickBooks don't use it in its entirety. They'll use it for bill pay or for invoicing or elements of it. But as a data stream and as a kind of an engagement channel, it's not a 24/7 type of a thing. So finding that sales mix and that channel mix has been an interesting journey for us. When we found out that well, we came to the realization that the enterprise channel, institutional channel, was the right one for us. Um, it was an exciting kind of realization, but that brings us to the second challenge, which is the structure of the banking industry in particular is designed very much to make it difficult for innovative, small, young companies to kind of penetrate that market. The sales cycle is exceptionally long, and there are a lot of regulatory challenges that are along the way of working with the bank. And so really we muscled through that and really felt committed to that channel as the primary channel for us going forward. And as a result, we were able to really get through a lot of those regulatory challenges and shorten that sales cycle. And what's interesting is that now we have a lot of large reference accounts. We have an insurance company that's, I think, the largest or the second largest insurance company in the US. We've got a lot of super regional banks, $25 billion asset range banks. And now that we have that foothold, it's a lot easier for us to expand. And that's what we're doing rapidly. But for a younger company, tackling this market is a challenge.
Right. So you basically have two, if let me make sure I understand this right. You have two revenue streams. One is the front end to the consumer, the small business, and then the back end is basically selling the data to these larger institutions. Is that right?
No, not actually. The way we work on it is we have a direct channel where people can sign up and pay, and we have a free to premium upgrade path for that. But the majority of our users actually come from the banks themselves, meaning that the banks are the ones that pay us, and they give it out to their customers for free, and it's siloed for that bank. So, particular bank will give it to their customers. They're the only funding provider, and it's a differentiator for the bank. It also enables them to make better credit decisions faster. So we actually go after these institutions, insurance companies and the like, and tap into their customer base, and they're actually are the customer that pays us.
Interesting. So are they white labeling it, or are they using the
they're co-branding it? The co-branded. So it's usually bank, brought to you by BodeTree or powered by BodeTree or something like that. We keep the BodeTree name throughout the system to different degrees, simply because it makes it easier for us for centralized hosting, and we do a lot of media work. I write for Forbes and do a lot with MSNBC. It makes it easier for us to kind of spread that halo effect a little bit around. But yes, it's co-branded, and so we're able to deliver our institutional partners on average about 128 brand impressions a year through the system, which is significant in that space.
Nice, nice. What's your exit strategy goal? A buyout or M&A or?
That's always a tough question, right? What I always like to say is that our strategy is to build a great, sustainable business. And if we do that, we have options across the board. I've been on the other side of the equation in the investment banking world, and the idea of an IPO or something along those lines is both stressful and terrifying to me. So we just remained hyper-focused on building the best business we can, and I truly believe that the right opportunity will present itself if we do that. I mean, we've had multiple acquisition offers in the past, and we've really remained focused on building the business, but we're always open to talking to the right partners.
Nice. Chris, what does true wealth mean to you?
That's a good question. I think true wealth is primarily it's the freedom to do the things that you care about. All right. So whether that's having enough money to put your kids through college, to remove a lot of the stresses, that sort of thing. That's one part of it. But I think that perhaps more importantly, wealth really is about freedom, right? It's about the freedom to live a life of meaning and consequence, and not one of quiet desperation, which is something that is divorced from monetary value in many cases. There's a lot of people that I would look at as being truly wealthy who don't make much money per se, but ultimately it's the freedom to be able to do the things that you care about.
Well said. Well said. What's the best piece of advice that you can remember, maybe off the top of your head, about building a business, maybe through becoming an entrepreneur or scaling your company up to where it is now?
I think the best advice I always give to people is, whether you're working with employees, partners, clients, whatever it is, you always want to work with people you trust, respect, and admire. Life is too short to do it any other way. And I think many times when you're a growing business, there's a temptation to work with anyone and chase revenue at any cost, right? Because that's the name of the game here. And when you run into the situation of potentially working with someone that you don't trust, respect, or admire, or you feel like you're compromising your principles in some way to work with them, simply to get that revenue and to get that traction, that's a scenario where you want to pump the brakes and kind of reevaluate. I found if you work and pursue the trust, respect, and admiration angle, you're never going to go wrong.
Yeah, I completely agree with that. It's so easy as an entrepreneur to fall into maybe compromising integrity or doing something or hiring the wrong person or partnering with the wrong person just with the dollar in mind, right? But it sounds like you're a guy that pays attention to the long game and understanding building something of value rather than just maybe making a dollar for today that's going to have consequences further down the line, right?
Exactly.
Yeah, absolutely. So what's a book that you really would recommend for maybe an early investor or entrepreneur?
Well, I've got a great one right here. It's called Predictably Irrational, and it's by Dan Ariely. I can never pronounce the name, but it's a great one that explores kind of the forces that influence decision making across the board. I found it very interesting, particularly when you're dealing with motivations of team members, motivations of partners, motivations of clients, to really take a holistic view at what drives people and what influences the way that they think about things. And I would definitely recommend that everybody pick it up. It's a great read.
Nice. I actually haven't read that one, but what I'll do is whenever we release this episode of the show, I'm going to read that book before then, and then we'll give out a copy whenever we launch it on that day. So
awesome. That's a great idea.
Yeah, absolutely. Do you have a quote or a mantra that you live by, Chris?
That's a good question.
I know I'm putting you on the spot with that.
Now, one of my dad's quotes that has always been in the back of my mind is that if it's too hard for everyone else, it's just right for me. And I think that there's some bravado in that, but obviously, it's a good idea and a good sentiment of never shying away from challenges because there's no shortage of them. And I think that, even if you stumble and fall and don't succeed at something, the journey and the learning that you go through in taking on challenges is always beneficial and always of value.
Nice. Well, thank you, Chris, for taking the time, man. I really appreciate it. And good luck with early next year. I'll do a follow-up with you at some point when you guys are release and have absolutely crushed it in that market.
Well, thank you. I appreciate that.
Well, I hope you enjoyed that episode with Chris Myers from BodeTree.com. And for more information about how you can raise capital from angels and startups and show notes pertaining to this episode, go to chrisdunn.com/013. That's for episode 13 of the Pathways to Wealth podcast. Again, it's chrisdunn.com/013, and you'll get a bunch of show notes, links, and resources. So I will see you in the next episode. Take care.